I just met Heidi. She's a wealth of information. She's done it, I've cited on a bunch of her classes throughout the years. So we just wanted to have her come up to share her knowledge with you all as redevelopment commission members, and I'm gonna record it so we can use it in the future for training as well, but also just for you guys to help you do your jobs as best as we all can.
All right. Well, thank you.
Yeah, I'd like to say that, I don't know if we're going to get any other people in, but it is a training session for members of the commission.
Yep.
And that, we aren't going to be taking questions from the audience.
And the idea in making it available to the public was to, if it's something that they would like to do in the future, come find out and learn. And
Right.
So that was
My name's Ken Walker. I
Lives right next door to Sally and myself.
Yeah.
Oh, okay, okay, good.
It's, your basic nosy neighbor.
All right.
Well, great. Well, thank you for having me here. I definitely want this to be conversational. I'll try to keep it as exciting as possible. But I do live and breathe this daily. So I'm a municipal advisor. I help cities, towns, and counties throughout the state of Indiana and the Midwest fund capital projects through municipal bonds is what I do 80% of my time. The rest of the time I live in the TIF administration world, reporting world, mixed in with some comprehensive financial planning for local governments. A lot of the ARP and federal grant monies that are coming down, work with that often. And a smattering of everything else finance related for Baker Tilly's. So we've been the town's municipal advisor for some time, been helping the redevelopment commission here and there. I've done some of these trainings. I think I was up here maybe 2 or 3 years ago doing a training. But definitely want you guys to take advantage of me being here with any questions that you have, even if they're specific, of the town and any objectives that you guys are trying to get done as a redevelopment commission, that we can definitely talk through those questions. I put together quite a bit of information. I don't necessarily plan that we're gonna go over all of it, just in hopes that there's actually some discussion about any questions that you might have, but if we get through it all, great too. So with that, I'm just gonna jump in. This is just general TIF in nature. It doesn't really get into your guys' TIF areas in particular. You will be required to have an annual meeting at some point this year where you do invite the overlapping taxing units, and some of this basic information is a part of that presentation. But this is just very high level, kind of 101 type slides. So this first slide, and you guys all have a packet if you want to take notes. This particular slide is a list of various local incentives that local governments in Indiana have to use at, have to use at their fingertips to finance projects. And though the list looks long in nature, each one of these items has different constraints that it has to fall within, what all it can be used to finance. And so I put it out there just so you're aware of different things in case you hear of them. But what we will be talking about today is just the TIF, which is that first bullet point there. So TIF is a financing tool to help economic development and redevelopment happen in local communities. In Indiana, almost every county nearly now has at least one TIF area within it. We help almost 200 different cities, towns, and counties with TIF throughout the state of Indiana alone. And there are 49 states that have TIF that are used in different ways throughout the country. So it's definitely a highly utilized tool, not something just specific to Indiana, but is heavily used in Indiana as one of very few tools local governments have at its fingertips to finance projects. So why do economic development, or in your guys' case, maybe more redevelopment of your downtowns for the jobs, for the wages, for the quality of life in particular, probably here, and to eventually build the tax base over a certain period of time.
This is what state legislatures pass
Yes.
laws or pass Yeah, laws that make this possible.
Correct.
Okay.
Yeah, 1989 was when the very first TIF was done up in South Bend, Indiana. And ever since then, it's just continued to grow, it's continued to change. We'll talk about one of the changes that happened a couple of years ago with the residential housing TIF areas in the state. But yeah, it's been around for a long time, and there's probably 2,000 different TIF areas in the state of
And that was
Indiana.
the purpose, that was the sole purpose to help
Yep.
communities. Okay.
Yep. So to encourage new business investment, whether that be local folks or folks coming in from out of town that are looking at community and interested in building and locating their companies here, and encouraging the job creation, targeting industries. With every TIF area, you have to have an economic development plan in place. And in that plan lists all of the projects that you anticipate you'd like to fund within your TIF area. And if there's not a project in your plan that you want to fund, you actually have to amend your economic development plan to include it. So it is for targeting certain industries. If there's certain industries that you guys are looking to locate here, or different types of development, that is one of its purposes. And then competition among other sites. So every company that comes to look at the state of Indiana is typically looking at other states or other communities within the state. And so we often get in situations where multiple teams internally in Baker Tilly are running numbers for the same company in different locations. So TIF areas is definitely a tool that they want to know that you guys have and are willing to put in place if a certain project comes along. So the redevelopment commission, this is not an exhaustive list as it mentions there of different powers you have, but the RDC can acquire properties easier than the council can. So often in most communities, the buying and selling of properties is happening through the redevelopment commissions, mainly because of the appraisal laws that are in place. You can construct or renovate structures. You can do different interlocal agreements and contracts for different types of projects. You can leverage the TIF revenue stream, which we'll get into a little bit more, over a certain period of time through a municipal bond issue. If you have a larger capital project that needs to be funded up front, you can do a 10 or 25-year bond issue, or whatever the life of the TIF area is, and fund a larger capital project up front. TIF can also be pledged towards grants, especially these federal grants that have come down, or ready grants that you might have heard of. TIF can be used as a match for those type of programs.
How's the life of the TIF determined?
That's a great question, and I do have a slide coming up on that. It depends on when the TIF area was created and the legislature that was put into place at that point in time when it was created. I'll get there in just a second. So TIF is an economic development tool that allows cities and towns, again, to capture new assessed value and property taxes from new development in a designated area to finance the incentives, encourage the orderly growth that I just mentioned, and to redevelop blighted areas. Redevelopment commissions can buy blighted properties with TIF revenues and redevelop, demolish, whatever it may be, those types of properties. One note there at the bottom is a common misconception is that if a taxpayer is within a TIF area, that they pay a different level of taxes, and that is false. No taxpayer knows if they are within a TIF area unless they are doing some research to know whether or not their property is in a TIF area or not. It's how the TIF revenue or the tax dollars that they are paying are distributed, where it gets distributed to the county, the township, the town, the school, the library, and then the redevelopment commission gets the TIF portion of the taxes that are paid. So again, taxpayers don't know and don't pay any different level of taxes if they are within a TIF area or not. Here are just some pictures of redevelopment type projects. So a lot of your downtown streetscape projects, signage, lighting, sidewalks, curbs, which it has been used for here, which I'll show you a list of things that have been financed over here in the past. Parking structures, if you're looking to urbanize and densify slightly in a downtown area, parking garages are commonly funded with TIF revenues. Roundabouts, you can see there. Any type of industrial parks or office parks. Your infrastructure, so you see more roundabouts there. A lot of road projects are funded with TIF. Fire stations, sometimes fire trucks, if it's something the town feels strongly that they want to use their funds on. So on this slide is a list. It has not been updated in a little bit of time, but is a list of projects for Culver that have been funded since 2005 for your TIF 1 area. So you can see on there, water and sewer infrastructure is a very common project that is funded with TIF revenues. Your sidewalks, your Main Street revitalization, streetlights, crosswalk signage. Your project Lead the Way is something you guys have been doing for, or that you used to do. Some television commercial, I think commercials were for your Chamber of Commerce, I believe. Your Main Street parking lot. Stormwater projects can be funded with TIF revenues. Really, TIF revenues are very flexible in its use as far as what type of project you need to fund. It just, again, has to be in your plan. You can see on here facade grant program, which I believe you guys still have in place.
Yes, we do.
So that's funded with your TIF revenues that are coming in on an annual basis. A certain amount of funds are being earmarked that, you know, constituents can come and apply for those grants to fix the outside of the buildings. You guys help fund the county's economic development group that is working to bring in companies to the county and all of the cities and towns within. So this is just a list of, again, examples of things that have been funded, but again, it hasn't been updated for a few years, as you can
And
see.
you say to fund it, it has to be an economic development plan.
So in serving or benefiting is the legal language as far as the project that is going to be funded with TIF. So if you see a fire truck on here, for example, it is serving the TIF area as a whole.
And serving, what was that again?
In serving or benefiting the TIF area. The project has to be in serving or benefiting the TIF area to be able to use TIF revenues to fund the project.
So
So-
it's pretty broad.
It is very broad, and I would say that most legal counsels, which I am not, most legal counsels can get comfortable with, you know, if you have a stretch of road that is outside of your TIF area, but it is leading into your TIF area and passing through it, that you can use TIF revenues to fund that project. Same goes with sewer, water, stormwater infrastructure that would be needed. If your town hall, for example, wasn't in a TIF area, you could fund a town hall if you wanted to, because it again serves the whole community as a whole. So we've seen that with some like performing arts type centers where they could justify that it serves the whole community, and they've used TIF for it, even if it is not directly in the TIF area.
And now you're gonna get into how to establish a TIF area.
Yes, I am. Any questions so far?
So just
Yep.
Leading on from what his question on you, or you mentioned a town hall. And in theory, the town hall, if a TIF were to fund a town hall, the town hall doesn't necessarily have to be in the TIF.
Does not. Again, you would have to get legal counsel's blessing on that, but yeah.
Okay.
Heidi,
Yep.
so you mentioned blighted areas. Well, let's say you had a blighted residential area that wasn't in the TIF.
Mhm.
Assuming legal counsel was okay with that, that could be acquired by the,
I would suggest that you would put it in, well, it's a perfect segue to the slide, actually, put it in your EDA boundaries. So there are three boundaries that as a redevelopment commission need to be aware of. The one boundary is outlined in the black here, is what I'd call your redevelopment district. You all as a board can actually issue a property tax bond issue payable from a property tax levy if there was a project that was big enough that if you wanted to, needed to fund a project. So that's the redevelopment district. It's what you guys have jurisdiction over. It is the same boundaries as the town boundaries.
The town planning boundary or the town
the town limits.
Town limits.
Boundaries. The red area are two terms. The economic development area is the EDA boundaries. And then the tax allocation area, I call it just the allocation area, is the second boundary that are related to a TIF area. The EDA, the economic development area, is where you can spend the TIF monies. And the allocation area is where you collect the TIF monies. They do not have to be the same boundaries. So if you knew you wanted to use TIF to, buy some blighted homes and demolish them, I would suggest that you would amend your EDA boundaries to at least have them in your TIF area. So it's very clean and clear that you could use the TIF to demolish those or renovate them or whatever you're going to do. If they were going to be demoed and you knew something was going to come up out of the ground and there would be an increase in assessed value, then I would suggest you add it to your allocation area to pick up that growth.
You go through that again.
Yes. And I'll give an example with it. So say there was an industrial building over here in this part of the town, for example, but you really needed to do improvements in your downtown, which is over here. But you can make your allocation area boundaries over this new industrial park building that's coming in to capture the assessed value and TIF revenues from that building. And then if your EDA boundaries extend down to your downtown, those monies that they are paying that you all get could be funneled into being spent in your downtown area. So your EDA boundaries, again, are the larger area where you can spend the TIF money. The allocation area is where you collect the TIF from a new development, a major renovation.
And these have to be within the town, city, or county.
They have to be within your jurisdiction, which is the town boundaries. Unless you have you can get into interlocal agreements with the county
So
or.
if you knew, again, that new area was coming in, you'd want to include that so you could get those values.
Correct.
to
Yes.
Someplace else.
So if it was in the county, but close, it was abutting the town boundaries and everybody was willing to annex and bring it in, then you would annex it and then create a TIF area around it. And then those funds would come back to the redevelopment commission to be used in serving or benefiting that TIF area. And the in serving or benefiting is actually the economic development area. So if they're not the same, then it could be used on a slightly larger area.
How do you determine the size of the TIF area? So you'd say, well, we want to make sure we include that. So literally the boundaries of that particular area, then
Parcels. It is a parcel list or a parcel, whatever it may be. If it's a single industry that's coming in, you want to capture, you would just create a TIF area around that one parcel of land. If there were multiples, then it would be, 10, 12, 100,000, whatever number of parcels in a specific boundary.
And this group can create as many
You can,
within as you want.
correct. So the town right now has 2 TIF areas. They were once coterminous with each other, but we amended it last year to pull out some parcels of properties that were generating some negative increment. So in that process, they are no longer coterminous, but there are, I think I put in here maybe a map of where your guys's are. Yeah, it's actually the next slide. So I pulled this off the GIS system, which, just so you know, as a redevelopment commission, Beacon is the town's GIS system. You can get in there and search an address, a person's name, whatever it may be. There is a TIF layer in your GIS system that will bring up the green shaded areas. Shown on this map, the green shaded areas represent your current TIF boundaries.
That's on Beacon. Really?
So we're often in Beacon daily, pulling at
I
properties.
didn't know any of that. That's.
Yeah.
So,
Yep.
you said in serving or benefiting, the TIF area or the EDA?
It's the economic development area.
Okay, all right. And I don't know that I know exactly what our EDA is here.
So your
Is there a
EDA
link
is
to that?
pretty much coterminous. There are just a few parcels pulled out of the middle of it. So when you look at these green shaded areas, I don't know if my little mouse yet, like this area, and then this parcel is out. There's a little bit that comes over here, and they can probably provide you guys can probably provide them better maps if you want, if you need better maps, and you can zoom into this on GIS, but goes down here and comes up here around
The
this
TIF
area.
map is the third one over.
Right, but then
Oh, yeah.
I thought the EDA could be different than the TIF, so I was
It
asking about the
can.
EDA, not the TIF. If
So
there's-
yours are pretty much coterminous with
Okay.
each other. So when you look at that map, it is your EDA and your allocation area.
Thank you.
Yeah.
Is any situation in Indiana where that EDA is the same thing as the town boundaries? Where they've expanded it that large?
I would not recommend that to a client because you have to be, you want to be very careful in the whole planning, and you've heard the word planning so many times already. TIF areas are really supposed to be used for a very specific portion of your community that you're trying to target, either redevelopment or economic development efforts. So if you start making your whole town the EDA, then it starts to question the purpose and the intent of the TIF areas. And so I just err on the side of making sure the state doesn't take it away from us as a tool, because it's so significant, and it gets fought every legislative session. We're down there talking to them and trying to educate them on why to keep it. So I would say if you can be as strategic as possible as far as where you're trying to focus your development or certain efforts, if it is removal of blight or whatever it may be, to try to keep it as focused as possible.
I guess,
And certain projects we've had definitely benefit all of that pink, like, I think our redevelopment paid for a water tower that services all of that.
Yeah.
So,
Right.
I guess I'm still confused about the EDA. Maybe it's very simple. I'm just not,
Yours are the same. So you've never had anything that's been different than that. So where you are collecting, where you're collecting money and where you can spend the money right now are exactly the same boundaries.
so it's basically the tips.
Yes, these boundaries. Yeah.
Okay.
So, but if you knew something was coming to town, like up here, for example, and I have no idea.
Yeah.
If something was coming here, but you really needed those funds to be used in your downtown for various efforts, you could collect this as your allocation area, but make your EDA like go down this road and down this road to capture certain parcels. So you can spend that money in certain areas. But again, you have to be very explicit of why you want to do that and what you're going to use the funds for.
You have to be explicit because of state law in case somebody comes up and says, wait a
Yes.
minute, this is not right. This is.
Yes. And would they do that? I don't know. But in me trying to protect TIF for everyone, I think the planning side of having a TIF area is extremely important. Because it is vague enough in nature that whole serving, like the water tower serves the whole town. So to me, a lawyer could get very comfortable with using those TIF revenues for that, even if it's not directly in your TIF area.
Is that one reason that, often when we're looking at parcels coming into the TIF, we keep the roads that are connecting those parcels in the TIF as well?
Some
Because you're
lawyers,
likely
yeah.
to do some infrastructure work to get to that area you're developing or.
Yeah, some lawyers are more particular about that than others. There are definitely several lawyers that are comfortable with just the general nature of a right of way, connecting them without actually having those parcels in the area. So that I would say is, but I would say because your pink area, your TIF 1 is rather stretched out in nature, that having that connection makes it cleaner and clearer, and which is why I think
Yeah.
he's always wanted to do it that way. Yeah. Which is totally fine. So for those visual learners like myself, the green shaded area here is what we call base assessed value, another term that's very important to know. So when you create a TIF area, and just say you were to create a new one today, say you were creating a TIF area with one parcel in it, the net assessed value of that parcel today would become the base value of that TIF area. When a new building comes to locate on top of that parcel of land, that building value would be the incremental assessed value which is represented in the gray, that assessed value, that incremental assessed value times the tax rate divided by 100 gets you TIF revenue dollars that come to this board. You guys have 100% say what those funds are used for in serving or benefiting the TIF area. After your TIF areas end, which is represented in this blue shaded area, all of that incremental assessed value is released to the overlapping taxing units tax bases. So your overlapping taxing units are your county, your township, the town, the school, the library, and any special districts, like your solid waste management district. So when their tax bases go up, tax rates come down, to get you the same levy number. So once your TIF areas start to near their end, then you'll want to be a little bit strategic about talking with the overlapping taxing units, talking with the town, schools to see if there are any projects that they need to fund, try to infill that tax rate from coming down. But getting a little technical.
I'm not supposed to ask a question, but I would like to clarify. You used several times, if a business or industry is coming to town, you might contemplate putting it in a TIF, but it's key to put it in the TIF prior to the creation of that facility.
Correct.
Otherwise, it's falling into the base.
That is correct. Yeah, thank
And
you.
how was the length of a TIF determined?
So if you create a new TIF area today, and my goodness, here it is. If you create a new TIF area today, it has a 25-year life, but it does not start until any long-term bonds are issued. So if you don't issue bonds and you just do pay-as-you-go projects with your TIF, then it technically will not end, as it's stated right now, which is here in this kind of last bullet point. Oops, one second. In this section here. Don't have your guys' report to remind me of when your guys' were created. You had a legacy TIF, I think. So any TIF areas that were created before 1995, they're what we call a legacy TIF area. They originally did not have an end date, but the legislature got smart and said, we don't like that. All TIF areas need to have an end. And so they said for any of those pre-95 areas that they would either end in June, on June 30th of 2025, or folks could issue bonds back in 2015, and whatever the maturity date of those bonds is the maturity date of the TIF area. 2004 and 2005 were when your guys' TIF areas were established. So you guys are going to be in this 30-year. So between July of 95 and July 30th of 2008, any TIF areas that were created within that window had a 30-year life that ended after 30 years. It was a fixed 30-year life. But if you create a new one today and add new parcels today, then it has a 25-year life that doesn't begin until bonds are issued.
We had some areas added, or some properties added to the TIF in 2014. My understanding is that it was, I think, added to TIF 1. And that life, TIF 1 ends in like 34.
Mm-hmm.
But those extend another 5 years after that. It's 25 from the year they're put into the TIF, correct?
Yeah, so if you were going to expand your TIF 1, for example, and add parcels to it, those newly added parcels would have a 25-year life that does not start until bonds are issued, and that portion of the TIF area would be pledged towards bonds. So when we go to do bonds, you can pledge a portion of your TIF area if there were multiple expansions to pay the debt, or you can pledge the whole TIF area to the payment of debt.
Amazing you know all this stuff, huh?
I have been doing it for 16 years, and honestly, every year there's something that's new and changes. So
So I think that last point where that Heidi was making is kind of what we're looking at with the development on the south end of town. If we create a new TIF out of the property that we'd be developing there, you get the full 25 years. So if we if redevelopment were covering some of that infrastructure cost, you're still collecting in that same TIF for that 25 years. So if you had an agreement with the developer where you're covering some of that infrastructure costs, you're collecting money to pay it. Essentially, it's kind of how we looked at doing that project.
The
Yeah.
assumption being that there's bonds issued in conjunction with that.
So in Indiana, redevelopment commissions can't give TIF directly to developers. There are several states that can happen, but in Indiana, you actually have to issue an economic development revenue bond to be able to basically funnel those TIF monies that the developers are paying back to them. So, and those can be up to the 25-year life of a TIF area. But as a redevelopment commission, you could pledge a portion of the TIF back to them. You don't have to pledge 100% back to them. It's called a TIF split when you would just give them a portion. I would say it just depends on how much growth and development is happening in a community and how bad you want a particular project in your community as far as what those options look like. But we put together what's called a TIF feasibility. We do a TIF calculation to show you, what said new company would generate. And then we could structure bonds if an incentive was being requested from the developer. And then give those numbers to you guys to take a look at. And I feel like it sometimes makes all of this discussion and to make more sense when you can see it on a piece of paper. Any other questions there? The slide that I skipped over is pretty generic. It's just, I would say more for reference as far as the calculation of the TIF revenues, on how you actually get to that. But it's that net AV minus the base AV gives you that incremental assessed value. And then the incremental AV times the tax rate divided by 100 gives you your TIF revenues that are coming back to you guys. Here, the next couple of slides are just kind of what we've talked about already as far as how the TIF revenues that you all collect as a redevelopment commission can be used to finance different types of projects. Again, it's extremely flexible in its use, which is why it's one wonderful tool local governments have, and one tool that does not increase anyone's taxes. That's one beautiful thing about TIF, is that it's not an increase to anyone's taxes to fund water, road, sewer, which would traditionally be funded with a property tax bond issue and a levy on all of your taxpayers. So if you have TIF revenues being generated, there's really a great source of funds without affecting your taxpayers. So roads, rail spurs and some industrial parks have been funded with TIF, the land acquisition, site development. And then at the bottom of the slide, pay-as-you-go project that I referred to earlier, that's kind of a one-time payment for a project out of cash that you would have on hand. You can pay for projects that way, or you can, again, leverage the TIF revenues coming in each year over a bond issue, over up to a 25-year life. The next slide is just a little bit more detailed with a couple more examples. Recreation facilities, we have seen financed with TIF revenues, job training in some communities where that is a need, especially working in conjunction with school systems. You are training individuals in hopes that they stay in your community. TIF revenues can be used for that type of job training.
Could you technically use TIF revenue to fund, if there's an organization at the county level, Lifelong Learning Network, they are wanting to put up a building for career path training, trades, skills building. Could redevelopment commissions help fund that? Even though it's at the county level and not the local municipality.
Definitely a good legal question. Okay. I think it would be similar to you guys funding the EDC, Marshall County EDC,
Okay.
and helping with that initiative that's helping the overall county as a whole.
Specific.
Yeah.
To
So I would think you could do kind of a grant of TIF funds out to them as an organization and just have that contract grant with them. That they're gonna, do certain or pass certain programs throughout the year to train.
I
employees.
asked that because I know that's a initiative taking place in conjunction with Ready, where they're trying to get Ready grant dollars. But they're obviously gonna have to raise their match dollars. I'm sure they're gonna hit up redevelopment commissions.
Mhm.
So, okay.
What happens though, like funding? Can you fund nonprofits?
What do you mean fund nonprofits?
Well, I mean, supposing a nonprofit comes in and asks for money. Can you use TIF funds for that?
It depends on what they would be asking you money for.
So Bill, maybe your example is Culver, is it Culver Little League or Culver? They came in,
Culver Youth League.
Culver Youth League came in a few months ago, and they have a relationship, I guess, some sort of lease with the school district. They have a baseball field, and there's numerous safety issues on that, and they were asking for money to, help fix
Lights,
the electrical system. And then also from an economic development perspective, there's a lot of traveling teams. They were asking money for the concession stand to be fixed up. And
Yeah.
the bathrooms, from a safety perspective to be fixed up. So Bill, is that kind of an?
Yeah, I was thinking, yeah, that's an example.
So I
In
would-
other words, there was,
Yeah, I would call that a capital project. So you guys can fund any type of park-related projects, capital projects such as those. If it's something, again, the redevelopment commission wants to do, you have to make sure it's in your plan. So I don't know if park-related projects would be in your plan right now. But I would assume that the youth league actually owns and operates. So it would just be kind of a grant to them as well to do certain projects.
How
Versus-
often can you change your plan? Is that
Whenever
done
you want.
annually, or can you do it,
Yeah, as many times.
next week, let's change the plan? I mean, can you?
Yes, you can. Let's take a 4-step meeting process to amend your plan. And it does go to council and it goes to plan commission as well, because they
Okay.
have to make sure that you are using the funds within the plan of the town.
Is that our, I'm sorry, is that our comp plan? The economic plan that,
No, it's separate. So the economic development plan is a legal document, 4 or 5 pages that goes along with a declaratory resolution that creates a TIF area.
okay, all right,
Yeah, it's different than the town's comprehensive plan.
thank you.
Normally, they try to align with each other as far as efforts to fund projects.
Sure.
Yeah,
Sure.
but it is separate.
And a lot of comp plans, the economic development plan is for latex.
Yes.
And we've been approaching our comp planning a little differently of, let's really take that component more seriously and engage the right stakeholders in our community to get that done.
Mhm.
So
how
it's
do we,
always just
how do we justify Visit Culver?
It's a lot like MCEDC is doing activity related to marketing, business, bringing in foot traffic, overnight stays, people spending money in your downtown, in your businesses in general. I think MCEDC, which is an economic development organization that you guys fund, is considered a 501c6,
Mhm.
which is similar to what you have with the Visitor Center or Main Street organization.
When
I
I
don't
was
know what you think
speaking
it is.
with the attorney at one point, he said basically that our economic growth depends on tourism.
Mhm.
A lot of cities' economic growth depends on industry.
Mhm.
Basically our industry is tourism, so so that allows you to support groups that are increasing tourism and development of that.
It's that serving of the in serving or benefiting. It's that serving your community as a whole. The next couple of slides are on a new initiative that legislature put into place 2 years ago, well, 2019, yeah. Where if a new housing subdivision is going into place and there are sewer, water, street, sidewalk infrastructure needs in that subdivision, that you can capture the new homes that are being built as TIF revenues, where in the commercial TIFs that we've been talking about, you cannot capture residential. You can capture apartments, which are technically commercially assessed, but you cannot capture single family homes. Well, this statute that is new allows you to capture single family homes so that you can do a couple of things, allowing that additional revenue to come in, allows you guys to fund those sewer and water projects, for example, that either allows the lot prices, if you're selling the lots, to stay lower because the infrastructure is funded already, or if you're having a developer come into your community, then it allows them to sell the homes at a lower price because that infrastructure cost has been paid for. And it's really the strategy that I would say a lot of rural communities are using, where they're having a hard time getting developers to even come into their communities to be interested in developing subdivisions. So I would say that I think there's probably maybe 10 that have passed in the state of Indiana. We're probably working on another 10 in various phases right now throughout the state that seem to be working well. One unique thing with this is that the school corporation actually has a vote whether or not this goes through. Where in a commercial TIF area, which I have a slide on in a minute, as far as the steps required to establish one, the school corporation is typically not involved, but they are with these residential housing TIFs, as I have on the right-hand slide here. So if it is something you're interested in, you can do that. I would say that from what we've seen numbers wise, it takes quite a few homes at a very high sales price to make much of an impact on keeping those infrastructure costs low. But it is an option and another tool that local governments have to generate revenue.
What's this 1%?
So when the statute was originally put into place in 2019, there was this 1% test. The average housing growth for the prior 3 calendar years must be less than 1% of the total number of homes in the town. So that test was a requirement previously to even have one of these TIF areas. But in 2020, they amended the law so that there is that second test, that if an area is designated as an economic target area of your community, then you can do a residential housing TIF no matter what.
Bill, Jonathan looked into residential TIF a few years back for us, but because of Maple Ridge, Santa Hill Farm, we had added so much growth that I think we blew the 1% number.
Right.
So we didn't qualify back then when he looked into it. Now this new thing would potentially qualify, we could qualify differently. But I was gonna ask if let's say we're doing a large, for us, large development, maybe 150 to 160 units built, right? But it's multi or mixed housing. So some of it is rental, some of it is single family homes, some of it's senior living, whatever the case is. Can you within, and we designated that as TIF, for example, that's where we're thinking we create a new TIF area.
Yeah.
Can you avoid having to do residential TIF with the single family lots, but do all the other parcels within that TIF
Yeah, you can.
as just normal TIF and collect that?
Yeah, so the senior living falls under the commercial TIF, I'll call it. Apartments, townhomes of a certain style that have a single owner that are being leased out. Those are commercial in nature.
It's possible that the TIF as it would be built out would still support some infrastructure costs without having to do the single family homes as TIF. or
Right.
residential.
Yeah, and that's always an analysis we can run for you just to kind of see where the commercial portion of the TIF will get you.
That's what we're
Yeah.
kind of thinking is if we had those numbers. Because it would be nice to just be able to still collect regular property tax off the single family homes.
Mhm. Yeah.
While you're still able to develop
Mhm.
based on, okay.
Yep. And we do have some communities that within that one development have a housing TIF portion and a commercial housing TIF portion all within one EDA. So
Okay.
you can do that if you would need to. But yeah. Mhm.
So it wouldn't even hurt us if we designate something as an EDA, you could still choose to not make the single family home parcels residential. TIF.
Right, if you still needed to do road infrastructure or whatever in the single family home portion, you could use the TIF and the commercial to pay for that. Mhm. Yep. So the next slide is, I would say, like commercial TIF areas, these residential housing TIFs can be used pretty flexibly to the revenues. So any construction of infrastructure, public improvements in serving or benefiting, those revenues can be used for acquisition of land is the same. So really, once you have the revenues, it's pretty much the same use of the revenues as your commercial TIF areas. You can pay bonds, you can pledge these towards bonds if you need to. And we often see them being pledged towards bonds, again, just to generate enough capital up front to fund those road projects or infrastructure projects that need to be made. And you can also reimburse yourselves too. So if you've funded a portion of the design or whatever before you TIF it and before you issue bonds, you can actually reimburse yourselves from the bond issue for some of those design costs and steps that you might have gone through. And that's the same for commercial TIF areas. Any questions with the residential housing TIFs?
Can you reimburse the cost of the upfront cost of the bond? Just curious.
Well,
Collect
your,
that?
any issuance costs should be funded or like paid for through the bonds.
Okay.
Yeah. If you had paid an invoice, and then you ended up issuing bonds, but you had already paid that invoice, yes, you could get reimbursed.
Okay.
Mhm. Yeah. If it's project related, there has to be a reimbursement resolution in place. And it has to be like within a 60-day window period of time, but any design, like engineering, design, legal counsel, financial advisory, all of that can be covered, reimbursed. Yep. So the next slide is on the procedures for establishing, we're going back to commercial TIF areas. So you guys, step one, already have a redevelopment commission in place. Two is to prepare the economic development or redevelopment plan. And then after that, there's a 4-step meeting process. So it comes first to the redevelopment commission with a legal document called the declaratory resolution, along with your plan. That gets adopted with you guys first. Then it goes to plan commission. Then it goes to council, and then it comes back to you guys with the redevelopment commission with a public hearing attached to that meeting, where folks can come in and talk about it. And then you pass what is called a legal document called a confirmatory resolution. And that is the final step for the process. So if you were on last year, we did go through that process for the amendment that took place. It can be done pretty quickly, especially if special meetings are willing to be had.
Yeah, we followed all of that when we took parcels out of it.
Yeah. If you want to add parcels, remove parcels, if you want to add something to your plan, remove something from your plan. We try to suggest that as many things you can do at once, the better, just so you don't have to continue to pay us and lawyers to go through the process. But we understand things pop up and things change throughout the year. So. And then if you are creating a new TIF area or adding to your allocation area, you have to do what is called a tax impact statement. That has to be done 10 days before your public hearing. That's something that we have assisted you guys with putting together in the past. And that just informs all of the overlapping taxing units, what the impact of creating the TIF area is. Which typically is, you need the but-for test and you don't have an impact in most cases. So you have that now in front of you in case you ever need to reference it again. Also with TIF areas come responsibilities of the Redevelopment Commission for reporting to the state. So January 1st, you guys, as your RDC, need to organize, set who's president, secretary, treasurer, vice president, and then the April 1st, excuse me, treasurer's report. That is only if you guys are not getting monthly statements from the clerk treasurer, then she at that point in time is supposed to provide you a report. More than likely you're getting them more often than once a year. And so that really does not mean very much to you guys. April 15th is always your first big reporting deadline to the state every year. We assist you guys with that report, and it reports on prior year activity. So anything that happened in 2021, revenues, expenses out, you had any debt payments, who the members of the RDC were last year, all of that information was reported into Gateway, which is the DLGF's online portal, where all of this information is uploaded. So all of that was turned in on or before April 15th already. The next deadline after that's June 15th, and that is when a letter is supposed to be sent out to all of the overlapping taxing units stating if you're going to pass through incremental assessed value. So each year you have a determination to make if you have excess assessed value that you want to pass through to the overlapping taxing units. You have never done that before. And I would say it's mainly the communities that have like huge industrial properties and have like lots of industrial properties that are generating a significant amount of incremental assessed value are the ones that are passing through, but a majority of redevelopment commissions in Indiana don't pass through. But you do have to notice all of that overlapping units. Right below that is a reminder of the annual TIF presentation to the overlapping tax units. That was a new requirement as of 3 years ago. And that requirement is you have to meet one time a year. It doesn't really matter when. We suggest about the same time each year. You invite the overlapping taxing units, and then you have to talk about 3 things. You have to talk about your budget, you have to talk about your long-term plan, and you have to talk about your impact to the overlapping taxing units. That looks like 500 different options, depending upon what your community wants to show. And if you think that people are going to come to your public hearing or not, or your public meeting about it. So it can be as elaborate or as simple as you want it to be. There's no prescribed form. You don't have to turn any of the information in. It is just in the law. And so you have to abide by it. So,
I think last year we had 4 people that came to the meeting.
which is pretty good, actually.
Yeah, which, as I recall, that was the most that we'd ever had.
Yeah, 4 is a lot, if that tells you anything.
Yes.
So we do advise to keep it as simple as possible. Just more what will help you guys and a good refresher for you guys, what you have. And then after those requirements come TIF neutralizations. So we are nearing TIF neutralization season. This process is one that the county auditor is responsible for. So the county auditor holds your guys's TIF databases for your TIF areas, and they administer those. So if there are parcel splits that happen, they're responsible for making sure those splits stay in your TIF area. If there are combinations of parcels that happen, they're responsible for making sure those are in your TIF area. But this neutralization is basically a calculation of a factor that adjusts that base value. So remember that green portion of that chart, that base value up or down with how AVs are trending in the town, in the county. So if all AVs in the county are going up, you want your base value to go up at the same level so that your TIF is not getting too much or more than it should, just because general overall changes happening in AVs. So for example, this year for pay 23, there's going to be significant increases in assessed value throughout the state of Indiana because of all the home sales that have happened here in the past year. The market's just booming. And so AVs are going to go up. So more than likely your base assessed value is going to need to be trended up as well, just to make sure that the overlapping taxing units are made whole for that, some of that general trending. And one factor has to be calculated for each one of, like, each TIF area that you have. So there's 2 forms that have to be filled out. And then that happens right before the county certifies assessed values for the year. And then it basically leads into the budget process for each one of the individual units. Again, I'm a visual person, so I like graphs like this. I think I kept in some additional slides here that explain what I just explained in a little bit more detail, just so you have it in writing. So I'm gonna skip past some of these. This is the slide on annual meeting. So I know I'm like inundating you with information, so
It's great.
want to pause again, see if there are any questions so far.
Can you maybe, one of the maybe complaints I hear, and we hear sometimes about TIF is that it takes money away from the schools. Can you explain how that works?
Yeah, I do have a slide on
Oh,
it in a little bit too, so I will definitely talk about that.
Covered.
Yeah. Yeah, that's a common question we get, so I do have a slide in here about that. So this slide is just on some of the benefits and costs of having TIF areas in place. It finances incentives, as we keep talking about, and that infrastructure that would otherwise have to be funded from your local income tax revenue or property tax. It encourages the orderly growth, which I can't ever say enough. It redevelops the aging and deteriorating areas. There's no additional tax levy. It avoids the referendum process. So unless you would go down the property tax bond route, then there's no referendum process because, again, there's no levy. It's basically how those tax dollars are distributed, or a portion of them come back to you guys. Extremely flexible in their use. In the future, they will result in a growth in that property tax base for all of the overlapping tax units once that AV is released. And then in the immediate, then it stimulates your local economy through having this revenue source at your guys' fingertips. As far as the costs, during the TIF area, if there's no pass-through, then those other overlapping taxing units are forgoing that increase in assessed value to all of their tax bases. Which we'll talk about the schools here in just a second. And then if you do have a bond issue outstanding, sometimes if it's payable solely from TIF, then there's extra security and credit enhancement that would be required. So one of the common questions we get, does this TIF impact or take away from the overlapping taxing units? And there's a test called a but-for test, which is listed here. And it basically says if the increase in assessed value from the new developments would not have occurred but for having the TIF revenues as an incentive, then it cannot be lost to the other taxing units. So basically, without these TIF revenues, if you weren't able to actually make that project happen and get off the ground, then you would meet the but-for test by using the TIF revenues to help that. All of your guys' TIF areas have met the but-for test up till now, because again, there was a plan and a reason for creating it. It wasn't just kind of a willy-nilly, you created it and you captured. Some developments were like mid-build and just to capture it. So the but-for test you will often hear about when talking about TIF areas. It does postpone that assessed value from being added to the tax bases of the overlapping taxing units. Some of these points are kind of repeated here. This third bullet point, as you know, with big industries, they pay taxes on their real property, which is the building. And then they also pay taxes on their personal property, which is the equipment within their buildings. So, like the industry you have, I forget what it is now, cabinets. What is
ACPI.
Yeah.
SPL.
Yeah, so that building has personal property equipment within it that you guys are not capturing because you allow that to be passed through to the overlapping tax units. But when if a new building and industry were to come, you as a redevelopment commission could capture the real and or personal property of that building.
Okay.
So, and some of the justification to other taxing units that may be not a fan of TIF areas, one of the benefits to them is you guys would just capture the real property and let that personal property flow through to the tax base. And then after the TIF area ends, then all of that AV goes to the tax base. This was just a study that Larry DeBoer out of Purdue did about that but-for test, and there's lots of numbers and calculations behind what he did, but it basically said that there is no loss or shifting if that but-for test is truly satisfied to the overlapping taxing units. So this is just in here if you need it. And then schools. So for those of you who have been around for a little while, schools historically did not necessarily love TIF areas because they felt like the redevelopment commissions were basically taking away assessed value that they should have received. Well, there was a change 3 years ago in how the school funding formula works. And now a majority of the schools operating and teacher salaries are all funded directly from the state. So it doesn't matter, school corporations only receive very few local property tax line items, and like their tax rates are very, very minimal now as far as what's funded from the local property taxes, and it is mainly funded from the state. So they if they would have like bonds outstanding, they could have a property tax levy in place for their bonds. Some of them have an additional operations fund that would be payable from a property tax, but really what you guys do with creating TIF areas is not ultimately going to affect them at all because they're a majority funded from the state now.
And they're seeing other kind of benefits.
Right.
Being,
Yes, and especially if you guys as a redevelopment commission work with them on funding any of the programs. On the bottom right-hand part of this slide are just some examples of how redevelopment commission and school corporations have worked together throughout the years. Ultimately, you are all in this together. So, identifying revenue sources, identifying projects that need to be done, and the challenges to try to keep people here and stay here, should be an all-in effort to try to make the town the best place for people to be and live and stay. I could get into a lot more, but I'm just gonna keep it high level. As far as reducing the impact on overlapping taxing units, as I mentioned before, that TIF split concept. So if you do have a new company that's looking to locate here, and if they have, 2 million of road projects that need to be funded, but the TIF generated will far exceed having to pay for that incentive, you could pledge just a portion of the TIF to fund that incentive and let the rest come back to you all as a redevelopment commission. So that's just capturing a portion of the TIF. That real and personal property we just talked about, and your options there. Let's see. You can pass through assessed value, which we just talked about. If you do have to issue bonds, trying to minimize the term of the bonds is something we can always look at to try to get those off the rolls as soon as possible and paid off as soon as possible. This next slide just has some risks of TIF. So if a project is delayed, that would be a risk. If a taxpayer appeals their property taxes, that would have a direct impact on the TIF revenues coming in. If a company goes out of town, if a company goes, and I don't know if it's on here, if a company is commercial and then it turns into a nonprofit exempt property, then you are losing all of those taxes. And if it's in a TIF area, then that would be a risk of TIF. Any legislative changes to TIF obviously could affect the TIF revenues coming in. So normally when we do TIF related bonds, I would say that depending upon how much TIF is being generated, who's buying the bonds, it could be double barreled, meaning that there could be another revenue stream supporting that bond issue as kind of a backstop to provide more security to a bond purchaser, somebody that's looking to buy the bonds. If there's a new project that's coming up off the ground and it hasn't been built yet, for some bond purchaser to come in and buy those bonds on a speculative development that's not complete, there's risk, obviously, that project doesn't happen. So in those cases, then we can add additional revenue streams as support to those bonds. The whole bonds discussion that we can have our own session just on that if we wanted. I have included a few slides in here just for your reference. So you can have the TIF with like an income tax backup, for example, or if you have edit revenues as a backup, you can do that for financing. You could have multiple revenue streams. If you had a large enough project, TIF could be one of multiple revenue streams if needed. Could be looking at. The next slide, I'm not going to get into too much detail, but again, wanted you guys to have it as a reference. It's just a smattering of different types of TIF bonds that can be issued. Each one of them have a different purpose and a different reason to be issued. So again, it's something that if you are even considering any kind of capital project to start talking with us as soon as possible, just to figure out kind of best method and route to go as far as the financing side of things go. And then the actual sale of those bonds, there's several different sale options. So. The next couple of slides are just how TIF has been used in other communities within the state of Indiana. I am not going to go through all of these by any means, but you can see just quickly in some of these, the water towers, industrial parks. So a lot of single developer TIF areas like the Toyotas of the world or its own TIF area. Weaver, Popcorn, and Marion. The next slide. All the commercial, industrial, mixed use. Kind of the space that I plan most often is kind of commercial mixed use where you might have apartments up above and retail below or an office space below. Next slide, just a little bit more examples of how TIF has been used. State. And every city and town in Marshall County have a TIF area. At least one. I'm trying to think of the smallest towns.
Both towns for Marshall County.
They don't have. Bourbon. Yep, Bourbon, Freeman, you guys, Argus, yep. Argus actually just did a residential housing TIF last year, the end of 2020.
And so Argus though has a different setup than us, right? But the ACDC group is not under, they formed an independent redevelopment. Does that make sense?
They did?
Yeah, they funded that. I don't think they collect TIF. They're just an economic development organization. They call themselves ACDC, Argus Development Corporation.
Yeah, I would say I don't work with that group very much. I think that they are the generators of new business and retention of business, probably like a chamber of commerce might be.
Yeah, very similar. They're doing like, they will buy a property, put a house on it, sell it, and generate some revenue
Yes.
for their organization that way.
This board can do that without having a separate board.
I think they just don't fall under statutes.
Okay. You can do what's called a community development Corporation, a CDC, and that is a separate and 501c3, I think,
Yeah, I think
entity.
that's how ours
It's
is.
probably how theirs is organized. And a handful of communities have those in place, mainly for the purpose of their focused efforts are on blight remediation. And you guys can grant that organization, a CDC, TIF revenues for that purpose. I mean, really, this board, you guys should be the ones that have the eyes and the ears on all redevelopment efforts, any new companies that are thinking about locating in Culver, like you guys should be the ones that have your ears to the ground on any of that, you know, besides obviously town folks, but so that you can take the opportunities of new companies coming in and capturing those in its own TIF area, or even if it's in your current TIF area, but it's maybe on ag land, if you want to pull that parcel out, once that company would come there, you could pull parcels out of TIF areas and create a new 25-year life to try to extend your current TIF area as long as possible. I forgot that Arkansas had that though. Yeah, normally they kick things over to the redevelopment commission to actually, you know, set up the TIF areas or, you know, get the project moving.
I think they might be the only one in the county that did that. Because Greenman has redevelopment the way we do.
Yep. Almost does.
Sheridan does as well.
Yep.
And First Plan.
Yeah.
And they are pretty much focused on the and buying properties. So.
Yeah. I know that the town drove the residential housing TIF area around a big industry that came.
Yeah, just recently.
Which isn't awesome. Just more downtown mixed use examples, projects, co-working facilities, if that's something you guys are interested in. Could be used for TIF or could be funded with TIF revenues. Just the best practices, I would say we've hit on all of these through our discussion. But the last point is, again, it's just having these revenues at your fingertips is a perfect opportunity to collaborate with, you know, other units of government within your community to make the monies go as far as you can. Again, the Ready Grant program or the ARP money that's coming in, all of those monies can be matching for, even if it's community crossings grants that you get, TIF funds can be used as a match for any of those federal programs. And then in that, just that the essence of economic development planning and having a plan in place, this is just one very high level example of a long-term plan. We typically would go out 5 years and not 3 years, but just to show you that you guys should have a plan in place as far as how you would like to spend your monies, even if it's just earmarking a certain amount of money each year for downtown renovations or economic development attraction, just having some number in there. And if it doesn't get used, you know, it would just roll to the next year, but having some high level plan in place, I think is important.
Heidi, you said something about community crossings, which we have done a few of those grants. Generally, we use our paving budget to make the match, but we do have, like this year, our community crossings covers one of the streets in TIF. I mean, it's very clearly a TIF. Does it have to be, let's say your community crossings plan, you know, we've got like 8 road segments in that plan, and one of them is in a TIF district. So we could ask for the matching dollars on that particular segment, or can it be a whole community
If
crossing?
it's new construction of a road, just so it's
Okay.
not maintenance and upkeep.
Okay,
You can't use TIF for any maintenance or upkeep or salary or payroll. You can't
to
use
be a
TIF. for-
new road and say a new development.
Yeah, I would assume bond counsel or lawyers would get comfortable with that.
Yeah, I think we
Create
did
a
it
new road.
just with Sand Hill.
Yeah, I've seen it done.
Yeah.
And like the next level trails grants, I've seen TIF be used as a match for those.
Yeah, we've done that with our stellar trails.
Yeah. So, yeah, TIF can be used for some.
And it's interesting because you'll have, you know, a resident will comment about you're using taxpayer dollars on a specific project. And we know it's TIF dollars or grant dollars or a combination of the two. Messaging that out though to the community, it's I think it's confusing for the taxpayer. Like, they don't understand what pots the money comes out of. And even when you do a grant, you know, in general, 80% of our trails have been covered by grant dollars that are coming from our community at all. And then this group has funded the match on all of those. So we've not touched municipal general fund dollars or taxpayer dollars. But yeah, for people to understand that is not an easy thing to convey, even when you try to convey it. You know,
Yes.
they just see the construction or the project and they assume it's coming out of their own pocket.
Right. Yes. Yeah, that is difficult. Yeah, TIF revenues is not, yeah, it's no additional tax revenue for all these wonderful amenities and things that you guys have.
And that's exactly how we pay for all of them. It's between redevelopment and grants. For 15 years I've been around, I've already been funding most of my work.
So it's just, you know, it's
makes
you
it
guys, the ones that are
difficult.
out, you know, again, with your ear to the ground, maybe sitting in the coffee shops, talking about, you know, what's going on in the town. You know, the spreaders of the good news and educating the taxpayers. I feel like sometimes that and grassroots effort is the best approach.
Yeah, I had a guy just yelling at me the other day right on the street about a trail project. And what a waste of his taxpayer money it was. And he was in no place for me to really respond. But, you know, I was like, this is actually grant dollars and TIF dollars that you're looking at.
Is that posted anywhere? I mean, online or something, if people wanted to go do a little discovery, not that they would, but.
Yeah, a lot of our public engagement and our stellar conversations were about that exact thing. It's just conveying that, I think, is really hard for people to grasp it.
Right.
It's hard enough to grasp it in our world where we're
Correct.
working with it and trying to figure out how to pay for things. But and the other thing I think we to address, you know, that process that you were showing everybody that you go through when you take out parcels or you add parcels and you create a new TIF. So we've taken some criticism for not doing that frequently enough, reviewing our TIF. But I think past CRC members understand there's a cost to hiring you, the attorney, and doing that assessment that we went through last year was in the tens of thousands of dollars between the various resources we pay. And we came out of it recognizing a savings of a couple $1,000s a year when we removed some of those parcels. There are people who think we were out tens of thousands of dollars, which we weren't. So I look at that couple of thousands of dollars and what we saved for moving parcels, and we needed to clean up some of those parcels anyway, especially going into this agreement we're looking at potentially doing with the development. But that 2,000 some odd dollars in savings, it would take us a solid 10 to 15 years to pay what it costs us to do that review, which is why we don't review TIF every single year. And that's another thing that's very difficult to convey to people. You know, do you want to spend 25,000 to figure out you're going to save 2,000? If you spend 25,000 and figure out you're going to save 100,000, great.
Yeah.
But we are not that large or have that many parcels that it's not always worth that effort. So to do one every 5 to 10 years makes more sense for Culver than say a community that has, you know, tens of millions in TIF revenue coming in.
Right. I agree. I definitely agree with you guys, and know that, especially during the TIF neutralization calculation that I mentioned, when we do that, we are looking parcel by parcel at all of your guys' parcels. We're not doing kind of like an audit of them to make sure that everything's in there that should be, but that is our one time a year to make sure that what you have in there is not, there's no huge fluctuations or something is missing. I mean, we're looking at base value and net assessed value for every single parcel when we do that analysis. So if there were something calculation wise that was really thrown off, we would catch it in that process. So know that we are looking at it at least once a year, kind of doing a deep dive on a per parcel level just to see what's going on. Because I would say in the past, there are some condos here that the state's methodology kept kicking the county system to removing their condos, but it's apartment apartment-like structure, so you guys are allowed to capture those in your TIF area. Well, the way the county system was approved at the state level, there was a calculation in that kept kicking those condos out to not being able to be captured. And so again, it was one time a year, we're able to look at it to make sure, again, all of those things are being picked up like they should, and nothing is like super out of whack. So.
Yeah, so in a way, we already have that built into our own policy and process here.
Yes.
We've hired Baker Tilly to do that annually. And we don't necessarily do the type of annual review we did last year, where we literally did go parcel by parcel and examine every single aspect of it. And saved a couple $1,000 a year.
Yeah, I agree. And I would just say that again, when I say you guys should be the ones that have your eyes and ears to the ground, knowing what new developments are coming into the town. I mean, those are your opportunities, again, to capture those in a TIF area, whether it be your existing TIF area or a new TIF area. So just, if you guys are aware of that, then you have at least 5 people that have a chance to try to capture those dollars when they happen, instead of letting them be missed per se. So.
Probably key for us there is our plan commission, who often gets that heads up because someone's coming in to rezone, or they're coming in because they want to put in a commercial property and it's, they've got to meet a setback or a variance, or that's the first red flag that would say there's potential development coming. And we need to make sure that communication between that plan commission and you occurs. And I think in some cases that's me or Karen, who happens to be at both those meetings.
Is anyone on the plan commission?
No.
Anyone here?
No.
So, and usually there's 1 or 2 of us floating among all the different meetings, but that is a piece that we've missed in the past. So when the general dollar store went in, it went through rezoning before it happened. Only it didn't trigger anyone to go, what are they putting in there? Can we possibly collect TIF off of that? Right. And that trigger should have been obvious to all of us. It was just an afterthought.
Right.
So that would be one we missed.
Yeah. So again, just for the education, kind of the refreshers are good. Yeah, every now and then. The next couple slides are just on the Ready Grant program. I don't know how involved this board has been in that program up to this point or will be, but this slide just has a few very high level points about the Ready Grant program. I would say that here in Marshall County, you guys have the Marshall County Crossroads effort that Jenny's on, that is really the one kind of collectively pulling together projects for the county with the intent to try to get as much of those funds here in the county as possible. But it's just a long drawn out government process. So I know different efforts are happening here in the county. I don't know if you want to mention.
We've kind of given the run as fast as you can toward Ready, slow down, run, slow down.
Yep.
And this group, I've just kept in the loop the way I have the council, and that some of how they're going to regulate those dollars wasn't known to us until recently. And now South Bend Elkhart, which is what we're part of that region, is doing a road show to educate all the stakeholders across the region on what you can do. And what we applied for in round 1 in Culver, one of our projects we've already funded. That was our multi-generational basketball court park project. And then we put in for housing, but from what we're learning of the process from South Bend Elkhart, if it's going to be a housing project, it needs to be hugely transformational, probably target low income or workforce housing. And it's, they just aren't going to get excited about any housing project for the grant dollars. And then we're not totally sure if, because we've already funded one of our projects that we put in for, if they're going to allow us to put something else in. That's not looking like it might happen.
Really? I do know projects can change from the original RDP that was put into place. And the state now has said that the program is being funded from the state's portion of ARP monies that were received. under the revenue loss calculation, which means the funds can be used for anything. But I know IEDC specifically so focused on the like talent and making sure talent can stay within the state of Indiana. That I would be surprised that it wouldn't be like
Yeah,
all
I
types
mean,
of
and
housing.
Is listed as a pillar.
Yeah,
of
for
the
sure.
4 areas I think they came
Yeah.
out with. So we still need to find out if ours would. But, and then if we could replace our earlier park project with a different park project, there's hope for that potentially. But there's a roadshow meeting Wednesday of this week in our region. And then there's one tomorrow, I think, South
South
Elkhart
Bend.
region that our consultant is attending that one. Yes, in our Washington.
Yep.
So I just talked to them this morning. And we met with Taryn, who's heading up the South Bend Elkhart Ready Committee. We had her in Marshall County for a day. So we're hoping, but we're gonna have to hit the ground running really fast if we're gonna put projects in locally. And then the county ready, Marshall County Crossroads team is definitely putting some projects in.
So again, just kind of awareness of that because it is redevelopment, economic development related. So that is all I have. And you guys have a meeting at 5. So if you have any questions or want discussion to happen.
One thing I'd like you to do is help me think, how should I think about the pressure is too strong of a word, but what I had initially learned about TIF districts, it sounded like the state was very interested in you retiring those districts as quickly as you could. And if you had revenues in excess of what was necessary to service the bonds, that maybe you accelerate your bond payments, close it down early. And if we have that additional revenue, there's other things we'd like to, use it for within our economic development area. And so how would we balance those two? Or do we need to be thinking about that much?
No, yeah, you definitely need to be thinking about it. So the state had that reporting requirements kind of arrow that I showed you earlier. They put all of those in place because they do want to have a better awareness of what's going on at TIF, for TIF areas, how much revenue is being collected, how much is actually going out, how much is accumulating and just being sat on. Just because there has been just a negative connotation that it's like a gold mine basically for local government just to kind of build up a bunch of funds. So that ED, this plan right here is justification in my mind of if you were sitting on money, of why you're sitting on money. And if one of those line items is economic development attraction, for example, it might not happen each year, but you're building up revenues basically in that particular line item for that type of project. Do you need to be spending it? Yes. If the coverage number at the bottom, meaning the amount of revenues you have coming in and the expenditures going out exceeds 200, the council can technically step in that case and say that you need to be spending your monies, or I think they have actually approval to make you pass through the assessed value. I've never had that happen. And I just recommend to clients to have a plan in place of some type. Again, not that it's concrete, set in stone. It can be a moving, living, working document, but having a plan in place is definitely justification for having those revenues. So
In a 3-year time frame is enough.
3 to 5. To me, 5-year really makes most sense. 3 years look better on the slide. Just to give you a general idea of something we put together.
Thank you.
Heidi, something I've been confused about for a long time, and I guess it does involve the difference between circuit breakers and tax caps.
Same thing.
It's one and the same.
Yeah, so basically circuit breaker is a percentage cap on all different types of taxpayers.
Okay,
So for your home, you can't pay more than 1% of your gross assessed value. So you take your land plus your building, that's your gross assessed value, not any deductions removed.
Right.
But just those two, 1% of it, you can't pay more than that in property taxes on your house. So if you are hitting those caps, then you are paying a lessened amount of taxes and not collecting all of that. That lost revenue is a circuit breaker credit, is what it's called. It's the property tax caps. It's basically tax dollars that are just not getting paid because you're capped.
Okay, so it's one and the same now.
Yes.
Okay.
Yep.
The advantage that we have here is our assessed values are on the high end. So that's able to keep our tax rate low. Our circuit breakers are, I mean, we lose $35,000 a year. So we have low circuit breakers. So if like other communities where you have low valued homes causes them to have higher tax rates, that's where you get into the more circuit costs.
Yeah. So kind of property tax 101, AVs and tax rates are inverse of each other. So when AVs are going up, your tax rates are coming down to get you to your levy, and your levy is your budget, the budget that the town has to work with. That budget can only grow by what the state growth quotient is that they give them. It does not change because your AVs are going up. It only grows by 4.3 or 4. We're projecting 4.5% for 2023. It can only grow by that much. So it doesn't matter. It really doesn't matter how much AV you have because your tax rate's just going to come down to get you to that same levy number. The only way that you can really get that levy number up is to issue bonds and have an additional levy on top of your max levy that you're allowed. So if your AVs are continuing to go up and your tax rate's coming down, really the town should be issuing GO bonds to try to keep that the town's tax rate level and where it's at. Because you don't necessarily want your taxpayers to feel an influx or a change in their tax rates each year. And I would say that you don't necessarily want your taxpayers to feel their tax rate going down either. Because you are a growing community and you have services that you have to provide and offer, and you want those to continue to get better. But
The expectations don't go down.
right, and the expectations in Culver are very high. And so there is real opportunity when AVs are continuing to go up to issue a GO bond to infill some of that tax rate. And this year, AVs are I haven't seen Marshall County yet, but Hamilton counties are, and other counties around are significant. Yes, because the home sales are making AVs just like, it's like 10 or 15% increase.
The highest property values in the county.
Yeah.
Probably surrounding county.
So just something for the town or the redevelopment commission to think about. Normally, I would say the town's the one issuing property tax driven bonds. But if you're at your debt, if the town's at its debt limit, then the redevelopment commission has its own separate 2% debt limit that you can issue bonds under as well. If you have a project that you need to finance. So I do, there's a real opportunity this year. And a lot of clients are already on the horn, watching it closely, wanting their AVs already, so they can make judgment calls.
We do have quite a list of utility projects at this point.
And the thing is the taxpayer won't feel any different because you're going to stay rate neutral because AVs are going up. So tax rates are coming down. So there's this opportunity to infill that rate, keep the rate at where it's been. It's the town's portion of the rate. So you all know that your tax bill is the total tax rate you're paying, has a county piece, has a township piece, school library piece, and then the town's just one piece. So you're not in control, obviously, about those other pieces, but the town's portion, of course, you are.
Aren't you kind of limited though, the amount of bonds you can issue? Depending on your levy?
No, not necessarily. You can issue, so you have it, the redevelopment commission has a debt limit, which is 2% of your net assessed value and divided by 3. And you can issue bonds up to that point. You can issue bonds over that point as well. And it's called a lease bond issue. And it's a mechanism in the state of Indiana to basically keep up with that debt limit calculation that's rather old in nature because it's 2% of your net AV and your net AVs are going up like 5 to 7%, probably on average each year. And so that calculation doesn't keep up with the growth in growing communities that's needed. So you can issue lease bonds, which get you over that debt limit amount. So yeah, you can really issue a property tax bond to whatever you guys are willing to take the grief for. But if you can stay rate neutral, then it won't matter. But yeah. Lots of options on the bond side. But, and I would say in the company coming into town example, and I don't know any of the details, but in those situations, basically to get that TIF money back to the developer, if the developer can buy their own bonds, that's the ultimate goal for you all. And that would be option one that goes out onto the table to them is we'll provide you your property taxes back over a 25-year period of time as an incentive, but you have to buy the bonds, which we can work through all of that. But basically, if they don't pay their taxes or whatever level they pay their taxes, that's what they get back. So they have 100% of the risk. There's no risk to the town besides just sending them the taxes that they get or pay back to them. So that's option one. And that normally in developer situation, they're familiar with that structure.
Is that what we're looking at?
They're wanting to do what they're calling an expenditure agreement, which is different.
Project expenditure agreement.
But we're looking at both options. We're having the attorney. And he's talked about it.
Yeah, the project expenditure agreement is kind of a new thing that I've seen your lawyers do recently, which I think work. If it's very project specific, I think administratively it could be a little bit of a challenge, but otherwise legally that's, I mean, obviously you just need it done legally, correct? So. But.
That's why we lean heavily on.
Right, yeah.
But you have to have the expert.
Why we pay the attorneys the big bucks.
What is a Dino building tax credit?
Dino building.
Dino.
So it is for very old industrial buildings that have been sitting vacant for a very long time. And they can get, it's a 3-year tax credit that they can get from the state to renovate and get the building up and going again.
So that's for industrial, not commercial.
Yeah, and there's age requirements as far as the life of the building has to be very old.
So do they literally mean like dinosaur?
Yeah, I forget what Dino actually stands for, but yes, I mean, it's, I think it has to be 20 or 25 at least years of age, vacant for 3 to 5 years plus, and yeah. And it's just a 3-year credit. So it's a state tax credit.
Does an auto garage count as industrial?
No.
Got a couple vacant downtown business buildings in the middle of the block that
So if a developer was coming to look at buying that building, or whoever,
Yeah.
the person, an individual was coming to look at buying that building and it met those requirements, there would be an opportunity then for them to file
that
with the
block
state
was
for a
built in
Dino grant.
1920, so
Yeah.
I'd say it's old.
Mhm.
That's vacant for how long?
I think it's 3 to 5 years. I haven't actually worked on one for a while. I think it's 3 to 5 years vacant, and then like 20 to 25 years old of age. There's very specific requirements with it, and I can get more information if you want me to.
I'd just be curious if we had any buildings that qualify.
Mhm.
So maybe a description of what would qualify specifically.
Yeah, that would be
We
good.
could
And
looking around
the
and see
number of years
see
it
what we
has to
got.
be empty. Yeah, the old auto body shop, I think's been empty for At least that one.
There was a school bus factory in Richmond. And I know the developer requested the dino credits and got that approved, and it was a very, very old building, and they went in and renovated it and booked it out to several different businesses and got their credit.
And it'd be interesting to see what exactly does qualify. 'Cause if it has to be an old industrial site, that would be,
Did not have much.
Yeah.
Industrial manufacturing.
we don't have much in the way of manufacturing that's sitting there empty anymore.
Okay.
But we have commercial buildings that are.
Mhm. Yeah, so if, and that, I don't know, if you guys ever, as a redevelopment commission, wanted to buy any of those and, any structures so that you had a piece of property that you could sell to said developer, just know you guys do have the wherewithal to do that if it's something you want to do. And that sometimes I would say if you are
Yeah.
trying to,
Do you have to to bulldoze it?
the TIF could pay for the demolition. So it's up to you. It's just whatever would make it more saleable.
If you're looking at a building, and most of our businesses that are empty, those spots that are empty, sit in the middle of a block, and they have adjoining or combined walls.
Oh, in downtown, okay.
Yeah. In some of them.
Yeah.
And you'd
In
have
those
to-
cases,
hey, it'd be like having your front tooth missing.
in that situation, I mean, you wouldn't necessarily want to build it. And you just have to be careful with downtown redevelopment. But if you had marketing efforts in place where you could get it under your ownership, if that's the issue, if somebody from out of state owns a specific piece of property and that's the challenge and they don't care about it, if you could somehow get under ownership of it, then you could market it on your own and sell it to somebody.
Yeah.
We see a lot of downtown redevelopment or downtown areas that's what's happened. People have bought them, how many years ago and then moved out of town and don't care about them, just like to own the property.
Yeah.
And so then it's, the local government's trying to figure out how can they get the land acquired and clean it up if
Yeah.
need be, and then push it out.
We've got, a few.
Yeah, we've got that situation for sure.
What the redevelopment commission would have to follow in order to purchase any property.
And
Just so
I know that you have
Yeah,
to
you
have
can buy any property
two
for fucking $1
appraisals,
or
but,
sell it for $1.
it says that you could sell it for more than, or buy it for more than the appraisal, but we need the specifics on what that would be.
I can definitely get that for you. It definitely is a little bit more legal in nature, but the second point, or dispose or acquire, for acquiring, you need 2 appraisals. But if you want to pay more than the average of those 2 appraisals, the redevelopment commission can do that, where the town can't. And you could buy land for like $1, or sell land and buy land for like $1, where the town has to do it for appraisal price too, I think.
Yeah, that was always my understanding, because council had to do the average of the appraisals was the highest you could offer, whereas CRC can do whatever they want.
Yeah.
As long as.
I'm sorry,
That's good.
is there any tools we might have to compel a sale of a commercial property that's vacant, out of state ownership, that doesn't seem to care?
To force them to sell.
Well, yeah, anything,
Or
we can
encourage
incentivize them by offering a whatever price, right?
Yeah.
But is there anything else, either incentives or anything that might compel a sale? Because we've got like we've got a vacant lot that's just been sitting there at main intersection. Forever. Shows no signs of being developed into anything that's gonna be helpful, to the town. And we've got those commercial, retail, empty retail space in between some of those things.
In the theater.
I think you'd almost have to do it through zoning ordinance and unsafe building ordinances, or abandoned building there's a state statute for abandoned building ordinance that we can adopt locally. There's ways to do it that way versus incentive.
Okay.
I would say too, like the Marshall County EDC typically has on their website, sites available within the community. It might be one place you want to meet with Laura and just kind of talk to her about what you guys are looking to do if she runs across developers or gains any interest to parties.
And some of the properties Marty's referring to, they're not even up for sale.
Okay, yeah.
So, or they've been empty for a significant amount of time, like 5 to 8 years. in
Is
some
the site on Main
cases.
Street? Is that somebody local?
Yeah, and the other Main Street as well. And yeah, I think all of them are probably Main Street that you've referenced in the past. The empty lot he's referring to would be Main Street, where we've tried to activate that lot before, we've approached the owner multiple times.
The only other way would be is if you guys have any developer, connections that, well, one, what do you want there? Ultimately, what do you want there? And who would build, such a structure and connecting with, local developers. I mean, a lot of even the Indianapolis area developers, they're going out to all size communities to do different types of development.
That's helpful.
To try to initiate conversation, maybe a developer could get further than somebody in town.
But we're working our comp plan now, right? So we can figure out what we want to do.
But pulling together of land parcels is something redevelopment commissions throughout the state are working on, trying to figure out, if there are certain areas that you can even buy up, multiple properties in a certain area. That is the biggest hassle for any developers coming into town, to try to get their hands on multiple parcels in a big enough area to get something off of the ground is the biggest headache for them. So if you can alleviate that headache in advance for them and have this beautiful site ready to give to them, and even offer them, TIF as an incentive at some level, sometimes that is enough. And because of your guys' name, you guys have so much going just on the tourism side of things with the lake. Just the name itself that.
Well, it's like 10 till 5. Why don't we?
Yeah.
If there aren't any more questions, we can take a break before our other meeting.
Thank you for all having me.
Thank you.
Asking lots of questions. I appreciate it.
Absolutely. Much information.